Hello, viewers. Welcome to Tanks Invest. We're talking about investing, finance, and professional development for today's systems only. The investment I'm going to talk today will be Ethereum ticker ETH. So it's my second posting as of today. Respect to around noon time today at 12:30 p.m. on the Eastern time. Ethereum current trading $3,537, up about 0.14% so far. On the stablecoin side of the world, it's relatively flat today. Not really a lot of movement. Has just been kind of trading on a sideways fashion, without any substantive, media affectation or any substantive, momentum across the market that's propelling us to either go down or go up at the moment. So it seems like a lot of people have just been holding at the moment right now. However, on the altcoin side of the world, with respect to the lag effects, it seems like it's occurring right now. Across the spectrum, Dogecoin's down about 1%, Cardano down about 1%, while Solana, XRP, and polkadot are all down about close to about 2% respectively so far. So, with respect to the news front, there's one specific substantive news that came out about 2 hours ago. I wasn't planning on posting so early, but it seems like this news is relatively interesting. It seems like there's a lot of bearish sentiments around, among the hedge fund communities. Several hedge fund managers on this article came out about 2 hours ago from Markets Watch, expects that Bitcoin to tumble once the SEC greenlights a Bitcoin-backed ETF. And they basically talk about all the reasons why. And what they're saying is that it's kind of like a deja vu moment that we are seeing with respect to Q4 of last year. So last year we were, initially in Q3, we were sustaining some rally, right? Which, makes sense across the equity side of the house, but also on the Bitcoin and other altcoins side of the house, right? When we try to reach the all-time high. And as these, obviously the sector rotation occur in Q1, among the whole industry, including crypto, kind of sold off from there, right? We had a relatively bloody Q1 and Q2 for obvious reasons because of the COVID variants news that got broken out, right, starting in March. So some of the people that on this article that are name dropping would be including people like Antoine Perorian, which is a COO, the Chief Operating Officer at crypto hedge fund ARC36, said with respect to the uptrends that we're seeing in the recent time frame, I would say the couple weeks so far, is different from about a month ago, when Bitcoin surpassed 50,000. And based on what he said so far on a high level, synopsis, he's saying that, unquote, there wasn't enough strength in the market to sustain further rally. So another guy that's also saying that, no, before I dive into that, Perodian also mentioned that now after consolidating for a long time in the 40,000 range, and he's talking about above 40,000 range, Bitcoin seems much better prepared for another upward move. But before it does that, or before it goes to the all-time high again, there's a high probability that we need to break it first before we continue the rally from there. So it's kind of comparable to my depictions as well, is that, because of the fact that we've been leaping up for quite some time now, in the market cycle perspective, you kind of need to go through the depression, the anger stage all over again before we can go back to the hope, optimism, and hopefully euphoria by next year, right? So I think this is what he's trying to say. Obviously he's throwing a lot of numbers in there in terms of like the Fibonacci levels and the range of resistance, but I would say on a high level, it's basically comparable to what we're trying to say or have been trying to say in the technical front. Another guy that's talking about a comparable deja vu moment in comparisons to Q4 2020 last year will be Dan Moorhead, which is the CEO of the asset manager Pantera Capital. So Pantera, as you know, is a crypto fund. They specifically invest into cryptocurrencies. And he said that with respect to the upcoming Bitcoin-backed futures ETF that SEC will approve, he foresees some sort of like a buy the rumor, sell the news, comparable to the comparable dynamics that we saw last year. And he said that basically, the launch will subsequently drive some anticipated pressure, which technically will drive some buying pressure in a temporary perspective. But as that occurred, right, people are gonna basically buy ahead of the release of this ETF and then sell subsequent to the confirmation or the initialization date of this ETF, right? And he's saying that in addition to to the ETF, which is one of the catalysts, he's also talking about that there isn't any foreseeable macro catalyst that will incentivize um, the whales, if you may, the corporate investors to be investing in it. So most of the buying pressure will be coming from the public investors, which per our technical analysis we've been talking about in the past. We know that that's not a favorable relationship dynamics, right? We want to buy ahead of the corporate investors come in, and that will subsequently drive the major surge on the market, right? But now, with respect to the surge that we're seeing right now, and frankly, with the small candles that we have across the sprinkle, it's not the most ideal setup for us if you want to obviously capitalize on your investments, because you are basically giving the whales more monetarization incentive to sell us down, right? So overall, I would say despite one positive catalyst, which frankly on is relatively obvious, like Bitcoin backed ETF should technically drive some buying pressure, right, on top of the burn rates, and with the big wild card with respect to obviously the FOMC meeting that will be happening in November. Even though we have heard from Jerome and Gary Gensler from the SEC that they have no intentions of banning crypto, but the technical setup and the supply and demand imbalance, um, on top of what they're saying, right, the buy the rumor, sell the news type of affectation, are I think they're speaking the right language in terms of how the story will play out, right? So I frankly don't have a opinion with respect to their verbiage. Ultimately, they are speaking on a media platform, so we have to understand their incentive behind why they incentivize to be speaking so bearish at the moment, right? Because ultimately they are in the business of making money, so it's something we have to watch, right? I think they brought up some good points, and these points are obvious, and I think it makes sense, which we've been mentioning. But I think the technical is what's going to tell the truth, right? So beside that news that came out with respect to the hedge fund managers, their sentiments, there isn't anything more on the news front beside the Vitalik news that we've already heard earlier today with respect to his I don't know, uh, you know, uh, disapproval or the lack of appreciation for the El Salvador crypto initiative so far, calling it some sort of the people are uneducated, negative verbiage around that frame of spectrum. So beside that news, seems like it's another new negative news with respect to the hedge fund managers. So let's just dissect it on a technical front. Just canceling out the noise, right? Let's not listen to the media front because ultimately they influence your feelings and ultimately make you make the not the most logical subsequent execution, right? So with respect to current level for Ethereum, we are up about 0.09% so far. Right now, we are overbought. We are 59 out of 70, right? And we are curving down right now, okay? So it seems like the apex was already formed recently at the 3,670. That's the peak. And it kind of matches with the minimal level that we've had on this September 16th, right? But we know, we've been talking about this for a while now, right? The next real level is the 3,850. We could not get there, right? This is not a level. This is a one-time thing with a cancellations in the past, right? You're basically in between needles. So we had one time of confirmation or consolidation, if you may, and then a second time. That's not enough to sustain. That means there's not enough people that feels like, that Ethereum is worth this valuation at the moment, right? Which subsequently sell us back down. And in terms of the MACD, we are curving down right now. And at the same time, we are leaning more towards the upper echelon of overbought right now. I think Ethereum is actually going to be selling off momentarily, contingent on no negative news, right? But we are seeing some negative news right now, and I think it's Sunday right now, so I think it's probably hasn't got picked up yet. So we have to watch, and I think ideally again, right, the real level to ideal dollar cost average would be the 3,150, 2,700 to 2,450 below from here, right? So this is something we have to watch, right? We might hear more news coming up with respect to the foreshadow of the FOMC meeting, the China crackdown news, and et cetera, right? So definitely, in terms of the risk versus reward ratio, in a risk management perspective, this is not the best level to buy it right now. I'm just saying, right? I really, really wish that we, if we were at the 30 or like at the $28 28 on the RSI scale, and we are just forming a golden cross, I'll be like, oh yeah, let's go in and buy now, right? I will be extremely bullish, but we're on the opposite side of the spectrum. We are at the very bearish side of the house right now. So this is not good. And again, we need to have some bearish settlements before we continue the market cycles to get us to the hope and optimism and then the rally to euphoria, right? So for Bitcoin, we are still leap up and away. This is the current surge or the minimal surge that we're seeing right now is mainly coming from public investors, as what the article talk about the hedge fund managers is depicting. We have a lot of volume in the recent time frame, which makes sense, right? Right now, we are at a very dangerous zone. We're 72 out of 70, so we're extremely overbought. We are slowly forming a curvature right now. So I think the apex was formed recently at the $56,000. So I would not suggest buying at the moment right now, right? If this was like at the 30, on the RSI scale, I'll be like, oh yeah, absolutely, let's all buy in. And the golden cross is formed, that would be a perfect setup, right? Like the best rule of thumb is basically when you see a golden cross at the same time, we're very depleted on the RSI scale, and you form like a cup and handle. That's like a perfect setup. But this is not it, right? We are extremely stretched up right now. Everything is screaming overbought. We're buying at a premium. So you don't want to buy things on a premium. You know what I'm trying to say? Especially not at this setup right now. So Bitcoin is relatively bearish, unless there's like another huge macro catalyst that I'm not aware of right now. So Dogecoin right now it's at the 57 out of 70, so it's okay, but I think with the Bitcoin and the Ethereum drag effect, we could subsequently sell back down. And again, the better level would be at the 20 and the 19 cents level, at bare minimum at the 21. Right now we have a relatively tough time getting back up above to the all-time high of the 35 cents. And at the same time, we're forming a curvature already. So I think it's in line with what Bitcoin is trading at right now, or at least at the momentum, right? Cardano has a comparable dynamic, but it's a little bit lagged. So we delayed right now at the 48 out of 70. We just formed a golden cross. So I think a Cardano surge could be ideal. And I think the next level should ideally up to, at the highest, would be around like the 260, which would be the peak. And we tried to get there before, but it's relatively shortly derated because of a lot of people just didn't feel incentivized to do so. I guess like they were chasing into the Ethereum and Bitcoin because of the news side of the world. But right now it's an okay setup. If you had to buy, I would think Cardano's is the one to buy, but you just have to hold for a while, right? Solana we're still selling off. We form a death cross, so this is not good. But we are in the normalized level, so I don't think the sell is gonna be like super severe. We won't get to like the 37. I don't think that will make any sense because we're at the 52 right now. But ideally, we need to go to the 113 or the 111, and ideally at the 96 at the bare minimum, right? And by then we should technically be depleted, and then form another cross, and then we'll form a golden cross, and then we'll go up from there. XRP, we are leaping up, but we are struggling to leap up because there is a lack of substance, right? We could see that we're trying to get to the next leap up per the technical, the 123, but we couldn't get there, so it's still bearish. We are extremely overbought with 65.70 right now, so this is not a good setup at all. I think XRP is either you go up all the way to the 130, which is a big stretch. We still have 12 cents to go, which is a lot in a percentage perspective. So I think 110 is ideal. $1 would be ideal. 93 would be ideal. Right now, it's definitely not a good setup. Right now, it's very bearish. Polkadots, we're selling off, which is logical. I think we are slowly forming a curvature down right now, and I think Polkadots is mainly driven by the overall market, not specifically what it is. But we do have a head and shoulder, so the sell-off is definitely imminent, and we saw that a bit already with that flash crash. Definitely something fishy going on. I don't recommend it when you see something like this. This is very, very manipulative. We are overbought right now, so something to be mindful of, right? So with respect to the, again, we're right on the market cheat sheet, we are in the anger and depression stage. I think that makes sense, and I think we need to be in that stage for us to continue to rally. And with respect to the frame of reference that I've identified for you guys, these are the risk management level to dollar cost average, right? And I need to shift my head. There we go. Yeah, sorry, apologies. So feel free to use this as your reference, right? I know that there are some people that are asking for additional crypto for me to take a look. I need to do a little bit more research to see the technical levels. It takes me a lot of time to like go through each one of them. It's not like I could just like look at the chart without and just like speak on it so quickly. I need to look into historical substantive consolidation zone, do a little bit of math, and then identify these levels in the risk management perspective, right? So hopefully, this is helpful, and appreciate your patience as well. It's my second posting. Again, the media front is you have to read it with a grain of salt, but I think they raise some fair points. But in terms of risk management perspective, I think just like stay within the logical frame of reference we've identified here, and that should do the job for us, right? So really appreciate you for dropping by again. It's my second video on this Sunday. I hope you guys have a great rest of the weekend, or if it's Monday for you guys, have a good rest of the week coming up, ahead of us. And stay tuned for us to come up. Take care. Bye.